So you're at a family dinner and your cousin starts talking about Bitcoin. Again, he's saying he made 40% last year. Your uncle bought some. Your coworker won't shut up about it. And you're sitting there thinking, I should probably understand what this is. But every time you try to research it, you get lost in a sea of technical jargon, blockchain, mining, decentralized ledger. And you're like, can someone just tell me in normal English what this thing is and whether I should buy some? Here's what makes it worse. You ignored it in 2015 when it was $300. You ignored it in 2020 when it was $10,000. Now it's 2026 and it's sitting around $95,000 and you can't tell if you missed the boat or if it's still early. Hi there, my name is Dan, and I spend way too much time thinking about why Bitcoin is either the greatest financial innovation in history or a speculative bubble that will eventually crash to zero, and nobody seems to know which one. If you're someone who's heard about Bitcoin for years but still doesn't understand what it actually is or whether you should own any, make sure to hit that subscribe button and give this video a thumbs up if this helps you out. Look, let me explain Bitcoin in a way that actually makes sense without the technical nonsense. Bitcoin is digital money that nobody controls. That's it. That's the entire concept. Right now, the dollar is controlled by the Federal Reserve. They can print more whenever they want. They decide interest rates. They control monetary policy. Bitcoin is the opposite. There will only ever be 21 million Bitcoins. No one can print more. No government controls it. No bank can freeze your Bitcoin account. Here's the analogy that makes it click. Remember when you were a kid and you'd give your friend a dollar bill? That transaction was done. You couldn't reverse it. Your parents couldn't block it. The government didn't track it. It was peer-to-peer, private, and final. But when you Venmo someone money now, that goes through a bank. The bank can reverse it. The government can track it. PayPal can freeze your account. There's a middleman with power over your transaction. Bitcoin lets you do that childhood transaction. Direct, final, peer-to-peer, but digitally and anywhere in the world. No middleman, no bank, no one with the power to stop you. That's what Bitcoin actually is. Everything else is just technical details about how it accomplishes this. Now you might be thinking, okay, but why do we need this? The dollar works fine. Here's what most people don't realize. The dollar doesn't work fine for everyone. If you're American with a stable bank account, yeah, the system works great for you. But there are 1.4 billion people globally without bank accounts, according to the World Bank. There are millions living under authoritarian regimes where the government can freeze your assets on a whim. There are countries like Venezuela or Lebanon where the local currency lost 90% plus of its value and people's life savings evaporated. Bitcoin was created in 2009, right after the 2008 financial crisis, when banks were getting bailed out while regular people lost their homes. The creator, someone using the pseudonym Satoshi Nakamoto, wanted to create money that couldn't be manipulated by governments or banks. Whether you think that's necessary depends on how much you trust the current system. But here's where it gets really interesting. Even if you completely trust the US government and the Federal Reserve, Bitcoin represents something the system can't stop. It's like when the internet was created, governments and corporations initially dismissed it as a toy. Then they tried to control it. Then they realized they couldn't. Bitcoin is the same trajectory. It exists now. Millions own it, and it's not going away regardless of what anyone thinks about it. All right, let's talk about why people buy it. And I'm going to give you both sides because this isn't black and white. Argument one, it's digital gold. Gold has been valuable for thousands of years, not because it's useful. You can't eat it or build much with it, but because it's scarce and people agree it has value. Bitcoin is the same, except it's better at being gold than gold is. You can send Bitcoin anywhere in the world in minutes. You can divide it infinitely. You can verify it's real instantly. Try doing any of that with actual gold bars. According to data from Bloomberg, institutional investors, hedge funds, corporations, pension funds, added over $30 billion to Bitcoin holdings in 2024 alone. These aren't random people gambling. These are professional investors with billions at stake, treating it like a legitimate asset. Argument 2, it's a hedge against inflation. When the Federal Reserve printed trillions during COVID, people with dollars saw their purchasing power decline. But Bitcoin, it has a fixed supply. They can't print more. So when the dollar supply increases by 40%, Bitcoin becomes relatively more scarce. This is why some people call it digital property or hard money. It's an asset that can't be inflated away by governments. Argument 3, it's following network adoption curves. The internet in 1995 had 16 million users. People said it was a fad. By 2000, 361 million users. Today, 5.3 billion. Bitcoin in 2015 had about 5 million users. In 2020, about 100 million. In 2026, estimates are around 400 to 500 million global users according to Crypto.com research. If it follows the same adoption curve as other transformative technologies, we're still early. Very early. Argument 4. Major institutions are validating it. In 2024, Bitcoin ETFs were approved by the SEC, allowing people to buy Bitcoin through their regular brokerage accounts. BlackRock, the world's largest asset manager controlling $10 trillion, launched a Bitcoin fund. Fidelity, Vanguard, Schwab, all offering Bitcoin exposure now. When the largest financial institutions in the world are building Bitcoin products, that's not a fringe experiment anymore. Now let me give you the other side because there are real concerns. Argument 1, it's extremely volatile. Bitcoin dropped 73% in 2022. It's gone from $20,000 to $60,000 to $30,000 to $95,000 in the span of a few years. If you can't stomach watching your investment drop 50% in a month, Bitcoin will destroy your mental health. According to research from Coinmetrics, Bitcoin is 3 to 4 times more volatile than stocks and 10 times more volatile than bonds. This isn't a set it and forget it investment. It's a roller coaster. Argument 2, it doesn't produce cash flow. Stocks pay dividends. Real estate pays rent. Bonds pay interest. Bitcoin just sits there. Its value is entirely based on someone else being willing to pay more for it later. Warren Buffett famously said Bitcoin is rat poison squared because it doesn't produce anything. He's not wrong. It doesn't generate cash flow. Argument 3, regulatory risk. Governments could ban it. China already did. The US could crack down harder. The SEC could impose regulations that kill innovation. This risk is real and unpredictable. Argument 4, it could go to zero. Look, there's a non-zero chance that Bitcoin becomes worthless. Maybe a better technology replaces it. Maybe governments successfully shut it down. Maybe people just decide it's not valuable anymore and no one knows. And anyone who says they know for certain is lying to you. This is where it gets really interesting. The psychology around Bitcoin is unlike any other investment. FOMO, fear of missing out. Bitcoin creates intense FOMO. Your cousin made 40%. Your uncle bought in. Everyone's talking about it. You feel like you're being left behind. According to behavioral finance research, FOMO causes people to buy at peaks and sell at bottoms, the exact opposite of what you should do. Most people who lost money on Bitcoin didn't lose because Bitcoin failed. They lost because they bought at $60,000 due to FOMO and panic sold at $20,000. The cult problem? Bitcoin has die-hard believers who think it will solve every problem in the world. They're called Bitcoin maximalists, and they can be intense. This creates an echo chamber where any criticism is dismissed as not understanding. But there are also people who hate Bitcoin with religious fervor and call anyone who owns it an idiot. Both extremes are wrong. The all-or-nothing fallacy. People treat Bitcoin like you either go all in or you don't touch it. But that's insane. You can own 2% of your portfolio in Bitcoin as a speculative bet without it ruining you if it goes to zero. All right, here's how you actually think about this. Question 1. Do you have high interest debt? If yes, don't buy Bitcoin. Pay off your credit cards first. Bitcoin is speculation, not an emergency. Question 2. Do you have 3 to 6 months expenses saved? If no, build your emergency fund first. Bitcoin can wait. Question 3. Are you maxing out retirement accounts? If no, max your 401k and Roth IRA first. Tax advantage compound growth beats speculation. Question 4. Can you afford to lose this money completely? If no, don't buy Bitcoin. Only invest money you can afford to have go to zero. If you answered yes to all 4 questions, then here's the allocation framework. Conservative investor, 1 to 2% of portfolio in Bitcoin. Moderate investor, 3 to 5% of portfolio in Bitcoin. Aggressive investor, 5 to 10% of portfolio in Bitcoin. Never more than 10%. Even the most bullish professional investors don't recommend more than 10% because the volatility can wreck your portfolio if you overallocate. If you decide to buy Bitcoin, here's exactly how. Option 1. Bitcoin ETFs. Easiest. You can now buy Bitcoin through regular brokerages like Fidelity, Schwab, or Vanguard. Look for tickers like IBIT, BlackRock's Bitcoin ETF, or FBTC, Fidelity's. This is the easiest way. You buy it like a stock. You don't need to worry about wallets or private keys or any technical stuff. Option 2, crypto exchanges. Platforms like Coinbase, Kraken, or Gemini let you buy actual Bitcoin. You set up an account, link your bank, and buy. The advantage is you own the actual Bitcoin. The disadvantage is you need to learn about security and storage. What I'd recommend for beginners, start with a Bitcoin ETF in your brokerage account. Invest a small amount, maybe $100 to $500 to start. Watch how it moves. Learn how you react emotionally to the volatility. If after 6 months you're comfortable, add more gradually. Dollar cost average. Don't dump $10,000 in at once. Invest $100 to $200 per month consistently. This way you buy some when it's high, some when it's low, and you average out the volatility. Look, I can't tell you whether Bitcoin will be worth $500,000 or $0 in 10 years. Nobody can. Anyone who claims they know is selling you something. What I can tell you is this. Bitcoin is real. It's not going away. Hundreds of millions of people use it. Trillions of dollars are invested in it. Major institutions are building around it. Does that mean you should own it? Only if you can afford to lose the money. You've handled your financial basics first. You're allocating no more than 10% of your portfolio. You're prepared for extreme volatility. You're investing for at least 5 to 10 years. If those conditions apply, a small allocation makes sense as a speculative bet on a potential transformative technology. If they don't, skip it and focus on boring index funds that will actually build wealth. The worst thing you can do is ignore it completely because you don't understand it. Then FOMO in at the peak of the next bubble. Either educate yourself and make a rational decision, or consciously decide it's not for you and move on. But don't let fear of missing out drive your decision. Don't let crypto bros on Twitter convince you it's a guaranteed winner. And definitely don't invest money you need for actual life. Hit that subscribe button if this finally made Bitcoin make sense. Drop a comment telling me if you own any and why or why not. And share this with someone who's been confused about Bitcoin for years. Whether you buy it or not, at least now you understand what everyone's talking about. I'm Dan, and I'll see you in the next one.